right, and welcome back to Robinhood Stock Market Watch List Facebook group. This is our normal Sunday meeting. My name is Carlos. I'm the creator of the group. Today is July 17th. It is Sunday, right before the week gets started. So something that we always like to do is kind of go over what information that's available looking ahead for the week. That way we know which day is going to be bullish and if it's going to be bearish, but also knowing what kind of activity is going to happen. That way we always know what to expect. And so I always post a lot of material and stuff every single day that we can find in our group in our featured announcements area. And so this is really important. However, the most important thing is knowing economic reports. And because economic reports have the biggest impact on the stock market. So that's like the number one thing that we always got to go over as we're doing our normal weekend due diligence. And out of everywhere that I've seen so far, the best place to get a lot of this economic reports information is through a free website called investing.com. It's also an application you can download to your app from your app store onto your mobile device. And so if you're on your mobile device, it should be a little calendar icon on the bottom right of the screen. If you're on the website, you just click on the economic calendar on the top right area near the popular links. And so by clicking economic calendar, we'll see a lot of gibberish at first. If you're not used to it, that's fine. We'll one step at a time. But we got to clear all this stuff out because we only need to kind of zero in on some particular information. So we got to click on filters. If you're on the mobile application, it should look like a little funnel. You want to click on that and just clear everything. There's only two things that we need on here, and that's a check mark under the United States, and then under importance, you'll see a 1-star, 2-star, and a 3 stars. We want to put a check mark under 3 stars because what we're telling the system is to pull everything that'll have the biggest impact on the United States stock market and the economy. So then click apply, and then we'll see information for this week. And so but it's also important, not only is it really important to look at this during the weekend, but also every day throughout the week, because all this stuff is scheduled to happen. Plus there may or may not be a forecast, like for example the crude oil inventories. There's no forecast yet, but there probably will be tomorrow morning. And so we got to see, are they setting the bar high? Are they setting the bar low? That way we can anticipate whether it's going to provide bullish characteristics or bearish characteristics. For example, so we see that there's nothing on for Monday. So, but we'll get more into some other things that'll provide Monday activity. But when it comes to economic reports, there really isn't anything scheduled to happen for Monday. But we'll have to look to see for the White House schedule and Biden, because last week he was in the Middle East and like Saudi Arabia, begging to do some oil deal, I guess. But so it didn't really provide a lot of bearish characteristics like it normally would if he's here doing press conferences and stuff. So out of sight, out of mind. So it really helped the market last week to uptrend. And so but for Tuesday, we have the building permits for the month of June. Now, the previous report for April was 1.695 million. And so the forecast is forecast to be a little lower, which would be bearish. And so because the forecast is lower than the previous. And so but by looking at the times, it's really important that you know when these reports are going to happen, because you'll notice that there's either bearish or bullish characteristics that could happen either minutes before or minutes after the report is released. And so when we're looking at this on the website, it's going to be in Eastern time. And if you're looking at it on your device, your mobile device, like your phone or your tablet, most likely using the mobile application, most likely it's going to use your time zone. So it's very, very important that you know what times based on your time zone that these reports are going to be released. And so in Eastern time, the stock market opens at 9:30. So this is telling us that this report is going to be released 1 hour before the stock market opens on Tuesday. And so that's going to provide a lot of volatility, during that morning. And so, but by, like I said, just looking at the forecast, it looks like it's going to provide bearish characteristics for Tuesday morning. If you're not sure what the report is or what it means or how it can affect the stock market, feel free to click on it. A little paragraph will appear and it'll tell you very easily, very simple right here, what it is and how it can affect the stock market. For example, building permits measures the change in the numbers of new building permits issued by the government. Building permits are a key indicator of demand in the housing market. So think about the housing market. Interest rates are sky high, so housing market, especially new to build new buildings, that's got to be much lower than probably forecast. But a higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. And so it's a very good key indicator for the economy, and it really does provide a lot of either buying activity or selling activity, for the majority of investors, when they see this stuff. And so, but there's going to be a lot of earnings. This is a huge earnings week, which we'll get into here in just a little bit. But Wednesday, we have the existing home sales. That's huge. And that's going to provide a huge indication of the housing market, because the existing homes sales is used existing houses. It holds the majority versus new, which that report would probably be next week, is going to be a lot less. It's like maybe 1 million or less than, maybe 500,000 or something like that. And so, but the existing homes, like the sales are hold the majority, and it's going to kind of shine a light on which direction the housing market. Now, the housing market's been huge lately, and so, but we may be seeing it's starting to kind of, significantly slow down, and we can kind of see the warning signal right here, where the previous report was 5.41 million, and the forecast is expected to be a little less than that. So if it comes back, if it can meet or beat the forecast, then it could easily provide bullish characteristics. If it can meet or beat the previous, then that may be able to provide even more bullish characteristics. However, you'll notice once you start getting dialed into these economic reports, the forecast seems to be the primary plan. Investors have this saying, you plan your trade your plan. And so the forecast, when it says if it's going to be lower than the other, even if it comes back higher, for some reason, it's still, investors are focused on their bearish strategies. And so it's just really weird, but the forecast always seems to hold the majority, and they seem to continue the plan, and you just follow the money. You just go with the flow, ride the wave, and stick with it, and utilizing your other strategies such as your moving averages and your patterns. But yeah, existing home sales, look at the time, 10 a.m. So that's 30 minutes after the stock market opens. Now, the most activity with the stock market, the most volatile times of the stock market is 1 hour after the stock market opens, and then 1 hour before the stock market closes. We call that power hour. And so we have the existing home sales 30 minutes after the stock market opens. Then we have the crude oil inventory levels. That'll be another 30 minutes after opening. So that's just going to provide a massive amount of volatility. And you probably have already noticed that Tuesday, Wednesday, Thursdays are the best days to trade during the week, because there's just a lot less activity during Mondays and Fridays. And the reason why that is because usually Mondays, people are getting back from the weekend. They're watching, observing, seeing how things are going, and focusing on when to get back in and stuff. And so, but you usually see a lot of activity during the power hour on Mondays as they're getting ready for Tuesday, Wednesday, and Thursdays. But then Fridays, that's when we see usually a lot of sell-offs and stuff. People getting out of certain positions, especially options. Getting out of things and either straddling throughout the weekend or maybe just not getting in anything, waiting for Monday. Or a lot of times you see people going into cryptocurrency. That's why Saturdays cryptocurrency usually goes up, and then they start selling on Sundays, getting ready for the stock market on Monday. And so it's just a repetitive cycle. But again, with crude oil inventory levels, we have to look at this regularly to see the forecast will come back. And we've seen how the crude oil inventories, it goes up and it goes down. However, crude oil inventory, there's two things that we really need the numbers down. The lower the numbers, the more bullish characteristics that's going to provide, and that's crude oil inventory levels and unemployment, which is called the initial jobless claims. These numbers we need down. Crude oil inventories, if people are buying gas, consuming oil, it helps the economy. They're driving, they're shopping, they're maybe going on vacations, going on trips and stuff, and that just helps the economy overall. Last week it was up 3.25 million. And so that's a lot. Inventory levels are filling up. That's definitely bearish. And so, but what we're seeing is most Americans get paid every 2 weeks. They're filling up, trying to make it last. They're filling up at their favorite gas station with the lowest cost, and so they're trying to make it last for 2 weeks. And so what we're seeing is inventory levels go up in the positives, then they go down in the negatives. So I anticipate that the forecast, it should be in the negatives. A lot of people, I think, filling up, especially as gas prices have been going down because the barrel of oil has been going down. And so that should provide bullish characteristics. So for Tuesday, again, it looks bearish. Existing home sales should be bearish at that time. So we may see a lot of dips, maybe some possible recoveries, just depending on earnings. We have to focus. We have to blend these two bits of information together so we know how each day is going to be. And so crude oil inventories, again, looks like it should be bullish. So that should provide a good recovery. So there should be a good, massive, hopefully dip on Wednesday morning after opening, and then it should recover for the rest of the day, hopefully. But like, again, we have to take a look at the earnings, because that also could freak out investors. And so Thursday we have coming up, we have the unemployment report, which has been really going up a lot lately. I've been surprised, because normally, same thing, when that goes up, it usually kind of bounces down, but it's been trickling up and up and up every single week. Like I said, we do these meetings regularly, and it wasn't that long ago where unemployment was like 185,000, it was 190,000. It's hovering around there for a long time, but it is up, rising quite a bit. And so if we follow that pattern, that's just, but again, like I said, the majority of investors always seem to focus on the plan, and it's saying that the unemployment should be less now, and so that should provide bullish characteristics. So the morning should open in the green on Thursday, and then we have the Philadelphia Fed Manufacturing Index for the month of July. Both of these are going to be released 1 hour before the stock market opens, so that's going to provide a lot of volatility those days. And it's always recommended to straddle. I'm not sure if you guys are familiar with that or with options, but straddling is a great strategy that allows you to not only bet a stock goes up, but you can also bet a stock goes down. And so I know that may sound conflicting. Why would you bet a stock goes up and down at the same time? But I always say that you can only lose what you have in one hand, but your gains in the other hand are potentially unlimited. And so in worst case scenario with a lot of volatility, if you lose 100% in one hand, most likely you're going to gain 200, 300, 500% in the other hand. It washes out the loss in the other hand. It's like an insurance play. You know, in case you're not sure how the market's going to go, it could be manipulated, or, you know, there's just so much, you know, news or world news that can interfere. You know, straddling can be a great strategy to use, and you can do it every single day. You can buy minutes before close and then sell, you know, minutes after the next opening. That's considered a swing trade. You have unlimited of those, no matter what size account you have. And so we'll get into options here in just a little bit, but the next most important thing that we need to talk about is earnings. So hopefully the economic reports make sense to you guys. If you guys have any questions, feel free to either voice chat with us, or you can chat in our Zoom meeting chat room here. Because the more you learn, the more you're going to earn, and it just needs to make sense. If you don't say anything, then I'm assuming everything makes sense. We're ready to move on.
Carlos, I have a question.
Sure.
The question is, you always recommended that sell your straddle first two signal in the morning. All right. So what is the actually two signal means? I mean, how we can use it? I mean, I actually still confused about this thing.
You're saying like the best time to sell in the morning?
Yeah, but you always recommended
for straddling?
You sell your straddle always first two signal in the morning.
Yeah.
So this is actually.
And that could also depend on, but the most important thing is utilizing your moving averages for those, and it just depends on the day. You really want to use a blend of your 1 minute and your 5 minute. And like, again, your most volatility is going to be within the first hour and the last hour of the day. And so going to Friday, we see the 1 minute chart here on the left and the 5 minute chart on the right. And so there's a lot of signals on the 5 minute chart, but it looks like the 1 minute chart would be the best one to focus on, usually within that first hour and the last hour. So and one of the beauties about straddling is that when you buy them the day before, you can buy them at the same time, and especially maybe a few minutes before close, and that way they're both at zero. They're all even. You're just getting ready for the next day, and going into the next day, it almost feels like a day trade, but it's not. So that's why you have unlimited of those, and that's one of the reasons why it's highly recommended to straddle. And going into the next day, and you're always want to looking for volatility. If it's flat, I mean, you're either not going to, it's going to either be a wash, or you could start to lose on both ends because of time depreciation. And that's why you want to try to actively trade these based on the first couple signals. And the signals are based off of moving crossovers and everything. And what we're seeing here, whether the stock market's down or the stock market's up, we're waiting for these signals. We can sell them at different times, maximizing our gains in one end and minimizing our losses on the other. So Apple is our primary stock option that most investors and traders trade, because for a lot of reasons, it's very profitable, and it's very predictable, and it's got a lot of volume, and so it maintains its value, and it has the least amount of time decay and depreciation. But we can see the predictable part of it here, where the stock price goes up, and comparing it with the MACD, it's also indicating a sell signal. So as it's going down, that means it's time to get rid of our call and to continue holding our put. So we sell our call, either securing our gains if the value was up, which I believe it was up like what I think 1.5%. And so it was then it began to fall, and that's when you're wanting to watch when to sell your put. We're seeing the MACD here. The gap bars are starting to shrink. That means it's losing momentum, and we're seeing the moving the price coming up past the moving average lines. And as soon as the moving average lines crosses over, that's saying it's done. You know, it's for sure going that direction. And the MACD has been saying, I told you so minutes ago, why didn't you listen to me? And so all these things are communicating. We got to listen to it like it's a language, and because it's your assistant telling you, you know, what to do and when to do it. And so, but we're, again, the 5-minute chart would have looked like this. And so it's just not enough information right here providing you what to do first thing in the morning. And that's why you want to focus more on the 1-minute chart early in the morning than the 5-minute chart. But the 5-minute chart is good, you know, for, you know, towards the middle of the day. You can kind of see where, you know, it comes down and then it's uptrending. We can start kind of maybe buying calls at that point if we want, or again, we can wait for the last 5 minutes of the day or whatever. It just depends. That's usually when you want to go heavy, is right before close, going into the, you know, the next day. So hopefully this makes sense. As you can see right here. Any other questions regarding this or economic reports? We'll have to start talking about the earnings. Earnings is going to be huge. We'll switch over here. Okay, so let's go to earnings. So within our group, like I said, every Saturday, I'm always posting things in our featured area, and act like this is like your bookmarks. This is your information that I help provide, as well as all of our analytics and whatnot. So this is this week's scheduled earnings report. It is huge. It is massive. It's going to affect every industry, you know, starting with the banks. Tomorrow morning we have Bank of America and all the major ones, and then we start getting into IBM and some of the other banks. And but Tuesday's going to be huge. You know, starting with Johnson & Johnson, Halliburton, and Lockheed Martin. But Tuesday after close, that's when the momentum's really going to happen with Netflix. Has been very, very volatile lately, and has been very bearish. I think it's plunged like 20% every, or almost the last couple earnings. And so that's been a huge profit for straddling, you know, if just trying to prevent any kind of you know, manipulation or whatnot. I mean, Netflix has been great for that. Then Wednesday morning, you know, we have a few Abbott, NASDAQ, but Tesla after close, that's going to be the biggest one for Wednesday. Then we have United Airlines. Thursday before close, we have AT&T, then American Airlines. We're going to see a lot of volatility. When one does good, it's going to affect, whether they do good or bad, they're going to affect all the others. And so, I mean, it's just going to be very interesting to see what's going to happen. Thursday after close, we have Snapchat. Snapchat's been a very, very volatile one. That one seems to move 20% in either direction. Then we have Friday, we have the Cliffs, Verizon, Americans. I mean, this is going to be massive. And so always provide the top 10 analysis for these, starting with the top. We have Tesla, and I always post some bits of clues within the picture, and so a lot of times, you know, a picture can say 1,000 words, and so no matter what, you know, information's in the analysis, but this is a clue reminding you that the Tesla Artificial Intelligence Day #2 is coming up. And it's going to be crazy because that's when they're going to provide a demonstration of the first available, to the public, an artificial intelligence robot. And this robot will be able to do some pretty interesting tasks and has some interesting specs. Like it'll be able to walk up to 5 miles an hour. It'll be able to lift over 100 pounds. It'll be able to do all kinds of stuff. I mean, imagine this vacuuming your floor or doing the dishes or gardening or something. I mean, this is like out of the future, but it's going to provide a lot more sales and numbers and manufacturing and jobs and all kinds of stuff for this company. So but this is going to happen towards the end of this quarter. So whether Tesla provides bearish characteristics, that may, bad news can be great news. It just depends on how you utilize it. If it dips down, most likely it may not ever get that low again. And so this could just be a great opportunity. So Tesla is scheduled to release their earnings Wednesday after close, and that's Wednesday, July 20th. However, the company's earnings release has a 44% expecting an earnings beat. That's been one of the lowest that I've seen in a while, and so there's just been some issues here and there, but they opened up the Tesla factory in Texas, and so it's got to make up for something. But I think overall, with some of the other factories like in China and stuff, during the lockdown, that may have really lowered the production numbers overall. And so this is just going to be very interesting. I think overall investors are kind of 50-50 with this one, and that's why it makes it so great for straddling, because option traders are pricing in around a 7.9% price movement on the earnings in either direction, up or down. And so when it comes to straddling, 8% for Tesla, that's going to be huge. That's going to be, you're going to lose 100% in one hand, and most likely you're going to gain several 100% in the other hand, as long as it does what it's supposed to do. If it doesn't, then if it ends up being like around 0%, no movement at all, there's a thing that's called IV crush. It means implied volatility crush. It is something that can devalue both calls and puts at the same time. There's no movement really in either direction. That's why we need to ensure that there's going to be that's expecting a massive amount of movement, because we don't want to get crushed. And these are really, if we're doing options on these are considered a lottery play. A lottery play is something where we put a little bit of money into, not a lot, because of the IV crush. But what we're looking for in a lottery is hundreds, if not thousands of percent gains. There's a lot of you guys that I've seen you post pictures that have gained 4,000% in one day. So you lost 100% in one hand and gained 4,000% in the other. That's a heck of a job. And so if you get a couple IV crushes, those huge other gains make up for those IV crushes. And so we just got to keep going at it, stay focused, and look for these big movers. And so the next one is Stranger Things, not Stranger Things, Netflix. However, the image does show Stranger Things, but this is really going to be focused more towards the it's weird because it got broken up into two different sections in two different quarters. Stranger Things came out in at the end of the second quarter, and then it had the ending part of it that came out at the beginning of the third quarter. And so but it's very interesting, no matter what this says here, that when the Stranger Things came out, it crashed the Netflix system. And Netflix has a really good infrastructure system that that supports a lot of bandwidth, but this is definitely one of the first times that I see that it crashed it for like an hour or two. And so, but Netflix is confirmed to release their earnings on Tuesday, July 19th. However, the company's earnings release has a 16% expecting an earnings beat. That is crazy low. However, their prices are crazy high. I mean, we're paying what, over $20 a month now for Netflix, for like the 4K and whatnot. I mean, most TVs are 4K now, and that's a great feature. And so what we're seeing is a lot of people unsubscribing and going to other platforms. I mean, you can get like 3 different platforms for the same price of this one. And so it's this is not looking good. And so however, the option traders are pricing in another good amount of volatility, a 14.8% price movement in either direction. And so again, we're going to see a lot of unusual straddling activity on both Netflix and Tesla. Just watch. Now going into the bank earnings, we have Bank of America. That's going to be a huge one. Bank of America is scheduled to release their earnings report on tomorrow morning, on Monday. And so we have the company's earnings release has a 41% expecting an earnings beat. So that's not good. Now, normally when we look at this stuff, an average percentage should be around 65%. I mean, these numbers are getting low. And so option traders are pricing in around a 5.5% price movement on this thing in either direction. So that's, pretty good, but it might not be good enough for straddling, even though that's still some pretty good volatility. But maybe on for long-term investors, if it does dip down, that may be a great time to buy in, because again, bad news can be great news. As the government starts increasing interest rates, we're going more rate hikes. We're going to see these banks maybe profit a little bit more, from loans and stuff, auto loans and home loans and whatnot. So this is good for them. And so we'll see what happens. And so then we have Goldman here. We have they'll schedule to release their earning report again tomorrow morning, Monday, July 18th. The company's release has a 25% expecting an earnings beat. That's terrible. So option traders are pricing in around a 4.5% price movement in either direction. Next one, we have the little Charles here. They're also scheduled to report their earnings release tomorrow morning, July 18th. And the company's earnings release has a 29% expecting an earnings beat. Another terrible one, just terrible. Option traders are pricing in around a 6% price movement in either direction. We'll see how that goes. However, all of that is going to provide a massive amount of volatility tomorrow morning. Most likely a massive amount of bearish characteristics tomorrow morning. Johnson & Johnson is scheduled to release their earnings report on Tuesday morning, on July 19th. The company's earnings release has a 49% expecting an earnings beat. That's almost 50-50. Option traders are pricing in around about a 2.5 price movement in either direction. Not a very good mover. It usually has a pretty small amount of volume compared to some of these other ones we've been talking about. Cleveland Cliffs. It may sound like a baseball team or something, but it assure you, the picture again can say 1,000 words. They're a mining company. They dig, and so we need these guys to dig for a lot of rare earth materials and the lithium ion materials to make batteries and all kinds of stuff. And so they're scheduled to release their earnings report on Friday, July 22nd. The company's earnings release has an 80% expecting an earnings beat. That's the highest probably so far that we've seen with the most percentage of beating their earnings. We've seen a lot of 20%. Now we're starting to see a lot of 80%. Which at 20% is basically an 80% chance the stock's going to go down. And so it just depends on how you look at it. Option traders are pricing in around a 9.8% price movement on this thing, and most likely a 9.8% upwards movement. And we have Halliburton here. As you can see, a picture shows a lot of information that they're, drilling for oil and everything. And we've been having some issues with trying to drill oil here. And so Halliburton is confirmed to release their earnings report on Tuesday morning, July 19th. The company's earnings release has a 52% expecting earnings beats. Again, that's almost 50-50. Option traders are pricing in around a 7% price movement in either direction, which is pretty good, where normally it moves around 2%. Because, again, oil has been a big subject lately. Snapchat has been always very, very volatile lately in the last several earnings reports. Nobody uses it. You guys still use it? No, nobody's really using Snapchat anymore. Snapchat is confirmed to report their earnings Thursday after close. However, the company's earnings release has a 40% expecting an earnings beat. Option traders are pricing in another 19% price movement, where the stock has averaged around 21% price movement in recent quarters. Last but not least, we have the Watchlist that's confirmed to release their earnings report tomorrow morning on July 18th. The company's earnings release has a 14% expecting an earnings beat. That's the lowest so far out of all of them. Option traders are pricing in around a 7% price movement. And this is the first time we've ever talked about this one. It's the first one out of the beginning of this group that this has ever been listed on here. 7% price movement is what option traders are pricing in, where in the past it's moved only like around 1.5% in recent quarters. So for some reason, there's going to be a lot of activity on this one coming up tomorrow morning. That's just going to really mix in with the rest of the bearish characteristics. I mean, they really know how to make a bearish day more bearish, don't they? Or a bullish day more bullish. That's why it's important that we always know what's going to happen before it happens. And so investing.com every Sunday morning posts the top 5 things, and not only the top 5 things, but the top important things to watch looking ahead for the market. And as we do our due diligence, a lot of this stuff is stuff that we've already talked about, or incorporate earnings step to the center stage this week. Last week's bank earnings saw mixed results, in the CPI report over shoot and subsequent Federal Reserve back and forth over the size of the next interest rate hike swamped and any individual company news. With less economic data in the United States that will directly affect the Fed policy making, and companies like Tesla, Netflix, Verizon, Johnson & Johnson, and Bank of America all reporting earnings have or may have a bigger impact. Meanwhile, the European Central Bank has a closely watched interest rate decision on Thursday, and several CPI reports are due out for anybody craving for more inflation news after last week's upside surprise. Here's what we need to know for the week ahead in financial markets. The first one is the blue chip earnings. The earnings reports that we just went over. The 2022 has been the year of the value recovery. And several blue chip overweight or heavyweights are on tap to share earning news this week, such as Bank of America, the Goldman. Those all report Monday morning to round up the major money center banks coming after the JP Morgan sounded a cautionary note, and Citigroup revived market optimism. Johnson & Johnson and this Novartis report on Tuesday, with both healthcare companies outperforming the market year to date. The Abbott Labs report on Wednesday, though it has struggled in part due to its role in the infant formula shortage in the United States. Roush Holding reports Thursday before the United States Open. AT&T reports on Thursday, and Verizon Communication follows on Friday, as telecoms have acted as a safe haven so far this year. However, Philip Morris International is on Thursday. The Union Pacific is on Thursday. American Express on Friday. And then the HCA is on Friday. And then the Schlumberger on Friday are also due to report. The obvious things to watch are how companies are coping with inflation, whether they are seeing slow economic activity, and whether this quarter will see kitchen sink efforts to take certain charges or losses, or to just lower expectations given to overall market awareness. The second most important thing is the tech earnings, because those are just really popular. A lot of volume in these, which provide huge market caps. And so that's why we see a lot of big movements with these lately. Expectations have already been lowered for many big name tech companies who report earnings this week, and investors' questions will be more geared towards whether the worst is past or not. Netflix reporting Tuesday after the market hours exemplifies this challenge, as the streaming giant has seen its shares drop nearly 70% year to date, the worst performance in the S&P 500. The first quarter earnings showed both a post-pandemic hangover and a management team not sure what was next. So investors will watch for any sign of a clear direction. Now, we've seen Netflix talk about adding more commercials to their platform to try to make up, for lost revenue and users, and so but they haven't done that yet, and so that's just not yet going to affect its stock. Maybe hereafter, we'll see. Snapchat reports Thursday after market hours. It has been a canary in the coal mine for digital advertising, and so it may have an outsized effect on overall markets again. Either way, it's going to be extremely volatile. Tesla reports on Wednesday and will be closely scrutinized after a rare quarter-over-quarter drop in deliveries. We'll see. The ASML Holdings report on Wednesday will add the latest key data point to whether the semiconductor sector is starting slow or not. Next is Twitter. Twitter will report earnings Friday morning. While they won't be hosting a conference call given the pending acquisition by Elon Musk, and report should not have any direct impact on the company's legislation against Musk, it will be closely watched all the same. Very interesting. Third is the ECB meeting. That's the European Central Bank. Meets on Thursday in a meeting that expected to see the bank raise rates for the first time in a decade. There's no shortage of news surrounding the ECB's decision, whether it be drama in Italy around Prime Minister, attempted resignation, or the Euro's flirtation with the parity with the dollar. And more news is due just ahead of the meeting, with the Eurozone CPI numbers due out Tuesday. Beyond the interest rate decision and the ECB president, Christine Lagarde press conference, the meeting is expected to shed light on the bloc's new tool to keep the country-level bond yields from spiraling too high. Number four, so it's we're definitely getting a lot of European, information this week. We have the United Kingdom CPI report, their employment, and the Prime Minister debate. The CPI report is also due out in the United Kingdom on Wednesday, with the unemployment or the employment data coming out on Tuesday. The Bank of England has been earlier to the recent rate hikes party, though proceeding at the steady 25 basis point pace. A strong employment and or high CPI numbers might put pressure on the bank to accelerate that pace in its next meeting in 3 weeks. Both these data releases come after television debates of the leading candidates to replace the Boris Johnson, of the head of the Conservative Party, and the Prime Minister of the United Kingdom. While Johnson's resignation was not directly related to the economic climate, there's no doubt tackling inflation will be top task for the new Prime Minister. Number 5, last but not least, the wither oil. With the United States President Joe Biden visiting Saudi Arabia last week, that was something that we were talking about several minutes ago, meeting with the Crown Prince, Mohammed bin Salman, despite the human rights concerns stemming from the 2018 murder of the journalist and the descendant, the direction of the oil comes back into the spotlight. Whether Biden got any immediate gains out of this political risky visit remains to be seen. The price of the crude oil has dropped nearly 20% in the past 5 weeks, coinciding with Biden's increased jawboning over oil companies and oil producers' role in inflation, though also more importantly coinciding with the increased fears of a recession. The price of oil poses a real catch-22 for the president, central banks, and the wider the economy. Sustained drop in the price of oil and subsequently gasoline prices would also take off a great deal of inflation pressure, but also may signal that a recession is here, which brings its own economic and political challenges. And this is huge because we know, but it's not confirmed, that we are already in a recession. And basically, a recession is when the economy has gone down. The GDP report, where it shows that the economy has gone down in 2 quarters, and so that was confirmed that the first quarter was the economy was down, and now when in September, when it's confirmed that the second quarter was down, that's when the recession is confirmed. But just know that if the second quarter was also if the economy was down, then that means we're in a recession right now. And so part of a recession is when gas prices start coming down, and because things are high, and because things are trying to get lower and whatnot. And so and that's what these are providing, those clues, letting us know that we're in the recession. And so we just got to know what to look for. And so the next thing that we get into is activity, and one of the best ways to look at activity with the stock market is through options. And there's a website that's free. It's called barchart.com. You can look on your phone or but you just pull it up on your browser, click on the menu, click on options. Most active options will give us an entire summary of what is going on in the options world. And if you're new to options, there's really only a few things, basic things to know, and that is that a call is to bet a stock goes up, and a put is to bet against the stock, betting that it goes down. And so when we're looking at the most active stock options, it's sorted out by options volume. Volume is the total volume of all option contracts across all the expiration dates traded during the current session. That's buying activity, that's selling activity, that's activity. And so you can see that Apple, Amazon, and Tesla always dominate the list because it is the most favorable stock options to trade, because they're very predictable. They move a decent amount where we can get in and get out. We can day trade them, we can swing trade them. And so just look at it. And one of our rules is to always follow the money. And so you can see that between Tesla and AMD, Tesla doubles it. And AMD's 4th place versus 3rd place. And so Apple, however, almost on a daily basis is always number 1. Every once in a while, maybe number 2 or 3 or whatever, because some other ones may have their time to shine or whatever. But when we're looking at this, we can spot what's normally on here and what's not normally on here. Like Citigroup is not normally, on this list, nor is it on the 5th place of the list. And so we can look at that as unusual activity. Plus, we know that the bank earnings session is really, getting started and everything. And so we can see, some possible straddling going on here, and as well as going into the weekend, going into Monday. However, Apple again has dominated the list with its most options volume, with over 62% calls. So that means 62% of this are investors betting the stock is going to go up, or 37% are betting against it, betting it's going to go down. So these numbers are pretty high. So that's telling us that most of these investors are pretty bullish going into Monday. And so, as well as being bullish Friday, because this is Friday's activity. So, we got to make sure we're aware of what we're seeing and what's still active and what's not. But going into Monday tomorrow, that this is pretty strong. And so, but we're in the bull season. The summer season is always the bullish season of the year, and so it's really just getting started. It's kicking in. And so we may just have to get through some of these rough earning moments, but then, it's time to rock on after that. And so, we were talking about Netflix. Netflix is down here, up 8%. I mean, it's doing a lot, but 53% are betting that Netflix is going to go up. 47% are betting against it. So that's almost 50-50. And with this volatility, like for example, let's take a look at Netflix on not so much our Webull platform, but let's say if you wanted to zero in on a particular stock option. Let's see its most active calls and puts. Let's see what's going on there. I use NASDAQ website, NASDAQ.com, another free one. And so, and with this link up above, we can always change the ticker in the URL address. So let's get Netflix on there. That is NFLX. So NASDAQ.com. Now this information is going to provide us the information from last Friday. And so we can see the most active calls and the most active puts. Look at the puts. I mean, the calls percentages. We're up over 3,000% on the $185 call. We're up over 2,000% on the $187.50 call. I mean, look at these. These are huge gains. Look at the puts, huge losses. We're at 99% loss. But you just gained a tremendous amount in the other hand. That's why we straddle. Don't have a call without having a put. Don't have a put without having a call. Don't be a one-way, person. Be a two-way. Go both directions, and that's why we can play it safe, because there's always manipulation. And I had a guy tell me once, as soon as you feel you have figured out the stock market, that's when the stock market has you figured out. And so it's just better just to play it safe. Have both your calls and puts. Have your cake and get to eat it too. It's a great strategy to utilize. But like I said, this is great information to really to look at and to digest as you're learning how to focus more on your due diligence. And again, looking for, but even if you're not in the stock options and you just like buying, whether you're long term, you just like buying shares, this can provide you great information on what people are buying. Because even if you're long term, you still follow the money. You still like to see what people are doing. Like Ford Motor Company is a really great, popular long term stock. They're working on a lot of new factories, new things, and whatnot. So they're going to have some rough earnings here coming up. I think they're next week, but they should be doing pretty good here in the near future. And so, but we can always look at some high, percentages in certain areas, trying to look for, what's going on, like Roblox. For some reason, Roblox is on the list, and they have an 81% a call ratio. That means out of this volume, even though it's still pretty low, 81% of this volume, they're buying, they're betting that the stock's going to go up, and it did last Friday, up 6%.
they're just hovering down below $40. And so there's another great area on this website that's called the option volume leaders. So this will provide the most active individual calls or puts. So if we click on it here, the page should load. And again, this information is from last Friday, right before close. And when we're looking at this, either on Friday or on any day, even right now, it's important to know the DTE. The DTE is the number of days until that option expires, as well as the expiration date. If it's at 0, it's expired, it's no longer valid. We shouldn't even be looking at it. We need to focus on what's currently active. And with Apple being at $150.17, right now, the $150 call strike price is the most active and individual call or put out of all of them. And so we see over here that it almost has a 70,000 in volume, where the open interest is now at 19,000. And again, if you're new to options, then you don't know what the open interest is, which is very important to know. It's the total number of open option contracts that have been traded but not yet liquidated via offsetting trades, meaning they haven't been sold. They're people that have bought and that have held previously from the current trading day. So that means if the prior, let's say Thursday, had a total of 19,500 people holding this, and now all of a sudden Friday we have almost 70,000 people that bought. That is pure buying activity because it exceeds over the current open interest. So going into tomorrow, Monday, these two numbers are going to kind of merge together, and then the volume resets itself every single day because then it just provides you your buying and selling activity. And so Apple call is definitely number one by a lot. Next one is going to be the Amazon call. Amazon right now is $113.55. We have a $115 call strike price that also expires this Friday, July 22nd, with a very high amount of volume, 57,000, and hardly any open interest. And now it's got a lot of interest that's going to merge itself tomorrow. And so that's huge. So there's a lot of attention on Amazon right now. Next one, another Apple. We got a $155 call strike price with the same expiration, with a lot of volume in this one. 49,000, just under 50,000, with a decent amount of open interest of 26,000 right there. Next one is a $152.50 call strike price for Apple, with a good amount of volume, 36,000, a good amount of open interest. So a lot of calls, a lot of optimism here going into Monday, even though Monday morning I'm still kind of bearish. So again, it's always good to, if you are, it's always just good to straddle, always have calls and puts no matter what. And you can have a certain percentage, like you can have maybe 60% calls, 40% puts. But if you start getting too, out of balance, then if it does go the wrong direction, then you're going to be more of a loss than trying to recuperate. And so the next one is the CGC. It looks like we have a couple of them here, but this one is the one that's currently active. And so, but it's a put. CGC, what is that? A cannabis growth or something? I think it's a cannabis thing. $2.24 right now, penny stock. We have a put at $2.50. So it's already in the money. It expires in August 19th with a volume of 35,000 and a open interest of hardly nothing, just under 1,000. So there's a lot of people betting against the CGC or the maybe cannabis stock. So we'll see. I just wish that they would just hurry up and vote it in, because cannabis recreational cannabis is going to be legalized one way or the other. It's going to be legalized either in two different scenarios. It's either going to be voted in, or it's when a certain number of United States get when it becomes legal, then it just becomes automatic for the rest of the country to legalize recreational cannabis. When that happens, these cannabis stocks are going to surge like 1,000%. It's going to be crazy. But once it does become legalized, because let's say it legalizes like in the middle of the year. So we have between now and the next year, because when the next year happens, that's when a lot of the new laws go in effect. So between now and then, we're going to see a huge surge in these cannabis stocks when it happens. But when it completely legalizes during the next calendar year, the cannabis market will flood itself. When something flood itself, meaning where you have a low demand, but where you have a high supply and a low demand, it lowers the value. It floods the market, and the companies begin to struggle trying to make a profit. Whether it be the farmers, producers, the stores, or whatever. And so and same with the stocks. A lot of these stocks were $50, $100, $150. Now they're at $2.50 or $2 and $5. And so, but we will get a chance to ride that wave. But just know these are not long-term stocks. But just know the plan is we're going to ride the wave up, and then we're going to get in, we're going to get out, and then we're going to say sayonara. It's a once-in-a-lifetime opportunity. We did the same thing with Canada. It was amazing, but we didn't know if it was long-term or not. Obviously it wasn't, and so but that was the time to get out. But the play is going to happen the exact same way here. So this is just a cannabis strategy. But some other areas you can kind of look at within this website. You can go to unusual options activity and try to maybe find other things that may have a big difference between the volume and open interest. Like the CGC, we're talking about the puts here. That's a huge one, 35,000. There's another one, a real. There's another. There's a call strike price, $250. Huge volume, 30,000. Open interest, hardly nothing. Now it has a lot of interest, so we can try and kind of see what's going on here. Here's another trick. Let's go back to option volume leaders. And again, it always automatically sorts it out by volume, because this is where you go to see the most active individual calls and puts. But watch when I click open interest. I click on that. Now it sorts it out by open interest, and but it because this website they want you to unlock it. That way you can see the entire list. Well, you just click refresh. Click refresh. Now we'll see the open interest of the entire the entire list, not just the page that we were looking at. We can now see that it is now all sorted out by the highest open interest. And again, open interest is the total number of open contracts that have been traded but not yet liquidated, not yet sold. And so far, again, our rules follow the money. Ford Motor Company is on the top. Ford Motor Company is just under $12 a share. We have a $20 call strike price. If you bought it even at a share at the $20, that's what, like an 80% gain? That's huge in a very short period of time. It's saying 189 days. That's next January 20th. That could happen easily, well before that. However, we have a 193,000 in open interest and a daily accumulation. So far, last Friday was around 1,200. Not a whole lot, but a lot of people don't focus on these long-term options. But it's more safer if you just buy them in shares. But not. Plus, not only are you holding on to maybe an appreciating asset, but they can also pay you dividends every 3 months. It just depends if it's a dividend stock or not. So we have Twitter. We have Twitter right here, which is currently at $37 a share, but we have a $55 call strike price with the same expiration date, next January 20th, approximately 189 days, with a massive amount of open interest of around 163,000, with a small amount of daily volume, around 1,200, just like Ford. Pinterest, we have another Pinterest here, but we have a put, Pinterest, which is currently above $20, but we have a $20 put. It's almost in the money. It's going to expire next month at August 19th, approximately 35 days. We have a lot of open interest on that one as well. And so another Ford Motor Company, about a $15 call strike price, same expiration, lots of open interest, good amount of volume on that one. ET, and you just go down the list. There's a lot of great opportunities here that you can find, and this changes every single day. And when you're looking at this, when the market is open, refresh the browser every 15 minutes, and you'll see different activity and whatnot. This whole list could easily change different orders and whatnot, but it's very, very valuable, extremely valuable, and I highly recommend that you bookmark it, start utilizing it. Bank of America, right here. We were talking about Bank of America. We've talked about interest rate hikes and whatnot. This bank is going to start becoming more profitable off of interest, and it's currently at $32 a share, might be even lower after earnings, but we have a $40 call strike price no matter what. I bet you these guys will buy more because they know that they're going to start profiting. They're going to start gaining. It's bank season. So the stock market has a yearly cycle and it has a 10-year cycle. Every year, 6 months, the stock market goes down. The next 6 months, the stock market goes up. The 10-year cycle is when we always have the catastrophic plunges and recessions and whatnot. And but every couple years, it's an industry's time to shine. So every 2 years, we got to have the biopharmaceutical, their time to shine. Then the next 2 years, it's the technology, and the next 2 years, it's oil or energy, and the next 2 years, it's this, and then the next 2 years, it's the financials stuff, and the next 2 years, and then it just repeats itself over and over and over again. And so the banks right now are low, and they may get a little lower, but like I said, bad news is good news. And that's the time where we're going to start seeing a lot more calls, a lot more volume, a lot more people buying into this because they know what's going to happen in the long run. And again, a lot of these, I think, even still pay dividends. So not only are you holding on to an appreciating asset, but they're going to pay you every 3 months. And so, just go down the list and anytime you want, look to see what looks good. Look at Uber. Uber right now is $21 a share, and we have a $40 call strike price. That's 100% gain in a very short period of time, right there. With an accumulating open interest so far, we got 66,000 and a 1,000 volume for that particular. And so when you're getting a good amount of open interest like that and a decent amount of volume, it's going to maintain its value. And so, this is just great stuff. Next one from the bar chart website is the straddling area. We got short term or short straddle, long straddle, short strangle, and long strangle. So most of the time, we're talking about straddles, but the difference between a straddle and a strangle is that a straddle is the same strike price. It's the same concept. You're betting both that the stock goes up and goes down, but the difference is that the straddle is the same strike price. The strangle, they're different strike prices. Maybe the call is $5 higher than the share price, where the put is $5 lower than the share price. And so, but you just don't want to go too far. You want to make it reasonable, like within, like it's recommended to stay at the money. Your strike price should always be where the share price is at. But if you're trying to, do something or trying to be on a budget, make sure it's within range, within reach, within 1, 2, or 3%, at most. If you're any more than that, the system just feels like it's not going to be able to reach it, and it's going to suffer a lot of time depreciation. And you lose volume, you lose open interest, and all that stuff. And so, always stay at the money is what's recommended. And so, so what we're looking for in these 4 areas is a lot of the same activity. We want to look for the same stock. So we work our way from the top all the way down to the bottom. So we start with T, look down, nothing. So TSM, that was a semiconductor, that Taiwan semiconductor company, I believe. Work our way down. No, there was just the one. Disney, looks like there's just the one there. Bank of America. Nope, just Tilray, another cannabis one, another one that we've been talking about. That's the only one I see on the list. Intel. That's the only one I see. That's the Delta Airlines. That's the only one I see there. Costco, Verizon, Apple, Netflix. I see 3 Netflixes on the first page. We got 1, 2, 3. Oh, and there's another Delta. So we're seeing both Netflix and Delta. There's a Tesla here, but Netflix seems to dominate the majority of the straddling. So you're starting to see that a lot of the stars are starting to align. We talked a lot about the earnings and stuff. We looked at the activity. Now we're starting to see more straddling activity from other investors. And this could be something that could be flying under the radar. And we don't want to miss anything flying under the radar. Stock market is like warfare. We need to have a battle plan. We need to see what the enemy is doing at all times, no matter what. And that way, it can never, it can never be unnoticed. And so we always need to know what's happening and what's going to happen before it happens. And so going to the next page here. Now, the long just means maybe the expiration date is a little more ahead than the shorter one, but they're all going to be like within 30 days or 60 days or so. They're not like that long, but it's very important that we look at all 4 pages. So start from the top and work our way down. We just kind of do the same thing. And there's the Verizon right there, UPS. I'm not really seeing any of the same exact stock. Uber, any other Ubers, Ford, no. So not seeing a multiple of the same stocks like we did the other page. Again, Netflix had dominated that page. So we're on the third one. We'll see if there's any multiple of the same stocks. Starting from the top, we have GOEV. There's 2 of them so far, right here. AMC looks like one. Let's see, PGR, BP. Not a whole lot on this page either. Just the GOVE. There's a couple Amazons. There's a 1 and a 2 right there. 3. We got 1, 2, and 3 Amazons. And so, but this is the strangle again, where you can see where the Amazon is currently at $113 a share, but we have a $119 call and a 107 put on that one, and then we have another 119 call and 107 put. I think just different expiration date, and then we have another 119 and then 107 put there. So let's click on the long strangle. Let's see if there's any multiple of the same things. Starting from the top, work our way down. Not really seeing a whole lot. Nvidia, is there another Nvidia? No. Roku was very busy the other day. Tesla, there's a couple of them. Teslas here. We got 1, 2, and 3, and 4 Teslas on here. So we got Netflix, we got Tesla. We knew that this was going to happen, and it's going to continue to happen. And so Meta for Facebook, we got one there. We got a second one there. So we got a little bit of straddling activity on these high market cap stocks, but they're not normally on this unusual straddling list. And so does anybody have any questions? Everything makes sense going into next week? Marco says, say CLF calls are going to print Friday AM. As we were talking about the Cleveland Cliffs, where was that at? Right here, CLF. According to all of our analysis, 80% expecting an earnings beat. That means it has a 20% chance that it could go down, due to manipulation or something that just wasn't. Or something that spooks the investors. However, option traders are still pricing in around 9.8% price movement on that stock. Let's see, Marcos, you say, so you can get dividends from holding forward options for 130 days. Basically, you just got to figure out what whether they are paying a dividend or not. When you're looking at their specs like volume and stuff, it'll say on there whether they pay a dividend. There'll be a percentage mark. The percentage is basically a year. So if they pay every quarter, you just divide that percentage into 4 quarters, and that's the percentage that you would expect based off of the share price that you would get depending on how many shares you're holding. So hopefully this information makes sense. If you guys have any questions, you can feel free to unmute or chat in the chat room. If you don't have any questions, I'm assuming everything makes sense and you are ready to rock and roll. I'm always available 24/7. Feel free to message me if you have any questions or comments, or within our chat room. This was also recorded, so you can also view it within our YouTube channel. Thank you guys very much. We'll see you in the chat room, and we'll be trading, making lots of gains tomorrow. Have a great weekend.